So welcome to today's webinar, everybody, coming to you live. Today's webinar, Beyond the Filing, Solving the Reporting Burden Hidden in Your Property Portfolios. From an overall topic perspective, right, most REITs and real estate organizations, have operationalized and to some degree modernized their annual reports, whether that's the annual reports, the 10Ks, the quarterly filings, the earnings, releases. But really, while there's kind of good operations or decent operations within those, oftentimes from our expertise and our experience, the challenge is really everything that lies beneath those filings. Whether that's the property entities, the JVs, the subsidiaries, the tax reporting, lender requirements. This still often relies on a heavy manual process and a pretty burdensome process. In today's session, you're going to hear from our team, and you'll be able to start to think about and diagnose the reporting gap across your property portfolio beneath just the public reporting aspect, and identify which reports are really truly governed versus which are still kind of that manual burden process, and understand where your biggest operational risks exist. Speaking now, I'm Dan Bassett. I'm a senior partner at Alpha, responsible for our North American real assets business. For over 18 years, I've helped real estate organizations, be it REITs, investment managers, owner-operators, really modernize their data technology and operations across the front, middle, and back office. Joining me today, excited to have Nigel Bunbury, who leads our Alpha North American integrated reporting practice. Nigel is a CPA with more than 20 years of experience across REIT finance, banking, and Workiva advisory. He previously led financial reporting for a publicly traded REIT earlier in his career and founded his own Workiva partner firm before joining us here at Alpha, and really brings a practitioner-led approach to Workiva implementations with that deep industry understanding and helping finance teams modernize their reporting. Also joining us today is Stephen Schwartz. He is a partner in Alpha's enterprise performance management practice. Stephen has more than 15 years of experience helping financial services organizations modernize finance planning and reporting, including large-scale Workiva and enterprise performance management selections and implementations that help organizations improve their reporting transparency and operational efficiency. So with that, just a little bit of background on Alpha and kind of what brings us here today together. If we go one more slide here. Alpha is a specialist financial services consultancy. We've got over 1,500 consultants across the globe working across the public and private markets. Many, if not most of our people do come from industry, having at some point sat in our client's seat, be that on the business side or on the technology side. And what that means and where we really shine is that we come with that deep industry understanding in the operations, the third parties you work with, the systems, and the data. We do work with 85 of the 100 top global asset managers. And across real estate specifically, we've worked with hundreds of organizations, including some of the world's largest, as well as the leading and emerging organizations across REITs, owner-operators, private equity funds, and institutional investors. One thing about us here at Alpha is we do pride ourselves on being technology agnostic. We do work with over 50 technologies, helping our clients navigate kind of build, buy decisions, system selections, system implementations, system integrations. We are actively keeping our finger on the pulse of not just the technologies that serve the industries we work in well, over the last 10 years, but also the technologies that will serve the industries well and real estate well in the years ahead. And today we're excited to bring kind of our partnership with Workiva to the forefront. Based on not just our experience with Workiva over the past years, but in the years ahead, we've seen organizations really successfully extend their use of Workiva well beyond just the single use case of the external reporting. In real estate especially, portfolios continue to grow, they get more complex, reporting requirements continue to expand, and finance teams often are not growing to meet the demand of those reporting needs. And with the often manual reliance on spreadsheets, manual reconciliations, institutional knowledge really creates not just a bottleneck, but unnecessary operational and control risk. And so with that today, I want to talk through our experience here, leveraging the Workiva platform from a reporting perspective. And I will pass it over to Nigel to talk a bit more through that experience today.
Title of this slide is Complexity is Compounding, but Capacity Isn't, in our opinion. The first thing we're going to start off talking about is portfolios, and we're referring today, as Dan mentioned, property portfolios. So we're specifically talking about equity REITs largely here. If there's any mortgage REITs on the line, this material may be somewhat less applicable, but this is primarily focused on sort of property real estate REITs. So what about portfolios? Every acquisition, every joint venture, every co-investment adds entities, oftentimes in clusters, as we all know. Holdcos, property cos, as Dan mentioned, sometimes the more taxable REIT subsidiaries, the corporate entities that retain some of that taxable income inside the structure. Property growth used to mean more square footage, certainly if you talk to a leasing guy or an asset manager. To me, being a reporting guy, DNA, that's in my DNA, it means more balance sheets. So when we map a structure with our clients, I think the number of entity reporting obligations really surprises every time. So that kind of leads us into our second box on the screen here is obligations, meaning reporting obligations. 10 years ago, this meant the gap plus the filing. Today, that means FFO, it means adjusted funds from operations, it could mean NOI, same store, same property growth, payout ratios, CapEx, maintenance CapEx, all of these industry KPIs and metrics, EPRA if you report in Europe for our EMEA friends on the line, JV packages. Every partner seems to want their own format of financial statements on their own calendar. Then you have the tax folks who manage things often in a giant tax Excel spreadsheet. There's sustainability reporting, lender covenants. None of these reporting obligations certainly take turns. They often all land in the same close windows. And the last box is teams. Entity counts have doubled, over time. Reporting obligations, probably much the same. Reporting headcount, in our experience, has stayed relatively flat. In my experience, in my personal experience, the coping mechanism has been largely heroics, right? You have the midnight analyst, you have that one-person spreadsheet owner who knows how to run all the macros and VBAs. You have that 11th hour JV package that comes together for the leasing team to send out. And all of that kind of works well right up until that person or group of people have to be replaced or they move on or resign or what have you. Then your handful of heroes actually become your biggest control risk. And why is this unsolved? That everything, it didn't belong to a system of work or a proper system of work, right? It belonged in Excel. And that's often what we see with Workiva. Oftentimes as a platform already inside the organization, we no longer have that excuse. So the technology gap has closed, but the adoption gap hasn't. It's stalled. So the operators who've industrialized this layer are pulling ahead. They're getting faster answers to their M&A teams, their deal teams. They're getting cleaner packages out for their partners, their JV partners with less discrepancies. Finance is a strategic partner, a strategic business partner versus a pure compliance shop. The next slide is one that really hits close home to me. Hits close to home, sorry. And if it's the one visual I'd like you guys to take away from today's webinar, it's this. And I call it the iceberg. I don't know if it looks like one, but that's what it's supposed to look like with the filing on top. That's your public filing. And all the other entity reporting, those single investment vehicles below the surface. So as Dan mentioned, I did run the external reporting practice for a public REIT for about 4 years. And if you had asked me back then to count the number of entities we have reporting obligations for, I would have probably looked at my filing calendar and started rhyming those off confidently. The real number was probably 10 times that once every entity was counted. I rarely gave any consideration to all of the co-ownerships and the annual audited property statements that hit my desk in February or March of each year. So above the waterline, we're talking about the external reporting realm. That is your glossy annual reports for our friends in EMEA across the Atlantic. For those of us in the US, that's your Ks, Qs, your 8Ks, your investor sup packs. It could be CFO call scripts, board decks, AIFs, maybe even your management information circulars, who knows. But genuinely, I've seen many issuers with this piece well modernized in Workiva already. And there's no question that that's the logical starting point for platform adoption. Because these are the parts that the board sees, the audit committees, the disclosure committees. It's the part that gets the airtime, so it's the part that got the investment. Below the surface, you have basically one property per entity or one entity per property. And whether that's a poor performing property like your dogs, or it's one of your star performing properties, it's still one-to-one. Usually it's more than one JV holdco once you consider the GP LP layers and you start stacking those. So these JV vehicles each have a partner waiting on a package each month, quarter, or year, sometimes all three. That could mean a proliferation of entities in the REIT entity, in the REIT structure. Sometimes 150 to 200 plus entity deliverables is not uncommon every cycle for a typical listed equity REIT. Why does nobody really believe this or see it? Is because Exhibit 21, if you're in the SEC world, only discloses significant or material subsidiaries, right? It's materiality exempts most PropCo disclosures, most LLCs. So the burden is real, but on paper, it's almost invisible. So you have the same deadlines below the line as well. Lenders will not move covenant dates. JV partner audits will not wait, and tax has kind of a hard calendar. So above the line, you have Workiva doing your version control, review workflow, audit trail. Below the line, you have Excel, Word, email, and somewhere in there, I bet a file, an Excel file, probably called Final V7. Use this one, right? We've probably all named a file or got something like that in our environment. So a spreadsheet or Word property reporting layer isn't just about audit risk. It's kind of showing up to your partners and even your own leasing team, looking a step behind. And in this market, that could cost you. So partners talk. Partners absolutely talk. It's a very small street, and they remember who reports well.
So how do we mobilize on really getting to what Nigel was laying out for us? This one live version of every property. Anchored around the Workiva platform. So let me start with the operating philosophy that we're seeing leading real estate organizations move towards. So rather than having separate versions of property information maintained by leasing, finance, asset management, legal, other teams, the goal is to establish a single governed version of every property that works from. So that's basically building your reporting data mart, your single source of truth inside of the Workiva platform. But it isn't just about making reporting more efficient. The real objective is enabling finance to become a strategic business partner by providing trusted, reliable, and relevant information to the front office at the exact moment those decisions are needing to be made. So whether that's an acquisition, negotiating a lease, updating valuations, capital allocations, et cetera, all these decisions come with almost zero time to react, and creates massive bottlenecks when the data is not available in real time, when you're having to go to different systems and download this or email different teams to kind of collect all this information into a centralized location. So what's interesting is that same underlying data supports a wide range of stakeholders. So obviously you have the public side of information, so your SEC, your 10K, your Q, your 8K, all your supplemental reporting, et cetera, all your metrics such as FFO, AFO that Nigel mentioned. So all the information is available, and you're likely you have governance processes and really internal controls built around those public filings. But that same data, when architected correctly, can be used to support all your other reporting needs, right? So that same data can support your joint venture partners, your lenders through the financial statements, like pro rata reporting, all your distribution schedules. It's all anchored on the same source systems being kind of pulled together and organized in a meaningful way to allow your reporting teams to react quickly. So basically helping you power that property level reporting, building all your rent rolls, your leasing activity, all your operational dashboard. And the challenge today is that while these reports are ultimately based on the same underlying information, the process is highly manual. Data is exported from one system, Yardi, MRI, et cetera. It's copied from spreadsheets. It's rekeyed multiple times. It's reformatted. It's reconciled in numerous different places. And these are all very common challenges that we see within the reporting cycle. And that creates a lot of unnecessary effort and delays and then potential risk of inconsistencies. And so, what is that impact? The impact is, as a finance team, you want to be able to support, your leasing, your finance, your asset management, legal team, right? All this information is available, but you also have your reputation, right? So the work that's being done by the finance professionals to help support reporting also helps build better partnerships, right? Makes you guys, makes firms want to interact and partner with you on the next co-invest, the next JV. And so, the future looks very different. Like imagine opening a dashboard for a single property and immediately seeing all your financial performance, your occupancy, your rent roll, your valuations, everything like that available in a one-stop shop in this reporting data mart. Automatically refresh from your source systems in a very timely and kind of near real-time capacity. And basically, and we're not asking, as you move into Workiva, right, common challenges for folks, maybe they're just starting their journey, or maybe you're just using it for your Qs and Ks, is, the level of effort it is to get teams ramped up, right, to get folks using this platform, helping them get outside of the traditional Microsoft environment. And we have found, many of our clients resonate with the same concept, is that it is because of the parity Workiva has to the Microsoft suite, the learning curve is very low. So you're not asking teams to abandon, spreadsheets or move off of the tools that they're comfortable with. What you're asking teams to move into a connected spreadsheet environment. So basically a connected governed spreadsheet, allowing you to preserve the familiarity with Excel, but also introducing governance, audit logs, live connection to that reporting data model. So you're really building a process that allows you to accelerate the ability to provide all that downstream reporting for your consumers, and ultimately be able to handle all the reports that we have listed on the screen here across all the different partners. So that's the goal, right? Trying to build towards this reporting data mart, this common data model that allows users to get the information that they need, allow them to scale quickly. When adding a new property, adding a new financial statement, it's not starting from scratch. It's leveraging templates methodically designed to help you scale and replicate across the different properties and entities, et cetera. So that's the goal of what we can achieve with the Workiva platform. Nigel, I guess in your experience when you were running, kind of REIT reporting shop, what was kind of the volume of reports that you had, and what were some of the challenges of kind of just keeping up with that volume?
Yeah, that's a great question. Great spread there, fewer than 50 to over 300. So just to kind of show you the size and scale of some REIT shops. Mine in particular, the challenge for me was the timeline. So we had a calendar year end, which a lot of REITs do have in North America. And the SEC, the Ks and Qs, the year end sort of coincided with when all the co-invest and the co-ownership statements were due. And that was a big challenge, because even though I sat in external reporting, the property accounting statements, especially the audited ones, generally it's one of the big four, that's the auditor. So they should all look and feel the same, right? So we all kind of know what the big four statements look like, and they would kind of hit my desk in around February timeframe, like around Valentine's Day, which is kind of right when we reported our year-end results. And we had generally 60 days to get these out under the LPAs, and there was just a slew of them. There was a lot more than I anticipated the first time. The first cycle I went through was right around when I was preparing for audit committee and things like that. And, there was just generally like 30, 40 sets of statements. And I remember, the cash flows being out by $1, or, the significant accounting policy notes weren't all the same, right? Like I remember the auditors made a change at the top of the house that should have cascaded all the way down through to all the property statements prepared in accordance with IFRS or US GAAP. And I'm reading like different notes, and that happens when things are disparate and disconnected. So as Stephen, you mentioned the concept of common content. And so significant accounting policies was probably is the best example of something like that. So if you're dealing with 15, 20, 30 sets of audited statements, all by, the same auditor, and you're supposed to have consistent accounting policies across the board, and you make a change to one, you're really relying on your property accountants to go and manually change every one of those Word documents and finding those notes and getting the exact, wording correct, verbatim, that the auditors want to see. And when it's not, and you have these inconsistencies in formatting and disclosures and things that should just be automated, it just really slows down the whole process. You have to send it back down, and it has to get the changes done manually, and send it back up, and the workflow is just very clunky. So I did find that to be a bit of a squeeze in the February timeframe. So again, talking about standardization, templatization, that's always kind of our approach. How could we standardize and replicate? So create one shell set of property statements, and sort of replicate and scale that and keep it consistent.
And I know it's been a few years since you ran your own REIT reporting shop, and obviously you've been doing a lot of implementations for Workiva. I think one common thing that we definitely see is that, many of our clients, particularly that are using Workiva for SEC reporting around the Qs and Ks, have often implemented it many, many years ago and have not gone back and kind of modernized their platform. And I think, not to put words in your mouth, Nigel, but I know there's been a lot of technology advancements with the Workiva platform, particularly over the last few years, as it relates to the private markets. Some of the key functions around, custom fields, being able to make things dynamic. You have dynamic table filters to allow you to suppress records, the common content that you mentioned. As you think about kind of what your reporting shop would have looked like, had you had the technology available or the, the knowledge you've had over the last few years of being an implementation partner, what would you change in your REIT reporting environment?
That's another great question. I definitely think I would have, loaded more of definitely the audited property statements are the next candidate below the SEC, the public layer. Even at the public layer, we had that standardization, that connected reporting cadence, but I think I would definitely choose to load those statements. It would be sort of a quick win. You mentioned things. I mean, a lot of these REITs were early adopters, as you mentioned, early adopted GRC, early adopted SEC. That's like you're talking over 10 years ago. I don't want to age myself, but it was a long time ago for me. And since then, they've come out, like you said, with table filters, range-based linking, placeholders, the concept of linking narrative, and then having placeholder variables for the type of, whether you're dealing with a partnership, a corp, an LLC, toggling just things within, common content, all these advancements in the technology. And we just, a lot of REITs, in my experience, just don't go back. They don't look back. They're very frugal. I mean, NOI is thin. FFO is, every dollar counts. But they just never gone back to retool or done that health check, and that is something that more and more of our clients are asking to do, saying, hey, we adopted, but we're at the tip of the iceberg, right? Like our external reporting is working great and fantastic and everything kind of come together, but have we really examined the rest of the structure, right? Because REITs, just by their nature, they're a tax-driven entity. They have to maintain that REIT status by holding a certain structure. And it's just results in many, many entities for tax and liability reasons. Everything is in, you don't want, the slip and falls, you don't want those to be, it's a single investment vehicle type setup. So it just, the statements proliferates and the reporting obligations. And once you start doing mixed use development and, you start kind of having the office with the retail and the residential piece on the top, you start to get more partners in the mix, right? So, and those partners could be very interested in how that particular IPP or PUD is performing. If it's PUD, they're looking at CapEx like every single month. They want to see that kind of reporting. So again, a tool like this Workiva platform gives you real time, a connected solution that you could kind of refresh to help drive better decision making. So for sure, I would have gone down and looked more closely at the property level assets.
Yeah. Well, let's talk a little bit about how we can make this a reality for our clients, or how we've helped do this with many of our other REIT clients. So, one of the first concerns that we hear from real estate organizations is, our data is everywhere. Property information lives in Yardi or MRI. Financials are typically in, your ERP ledgers such as Oracle or Workday or NetSuite. So you have this already fragmented system. And then you start to layer on things like your valuations. Where are those being maintained? Who runs those models? Where does our leasing data sit? Is it in spreadsheets? Is it in a homegrown system? So there's typically numerous files that are needed to kind of start to stitch together this reporting data mart concept that we've kind of helped paint the picture here. And then on top of that, typically what we also see is just the definition of these data, the mapping, the reporting logic can be, fragmented across different teams. So without a good, enterprise data management layer, without, metadata management and kind of foundational principles in place, it can also seem very daunting to try to accomplish kind of building out this reporting data mart that we're depicting here on this screen. So the good news is that solving this problem does not necessarily require a 2-year enterprise transformation, kind of replacing any of your core systems. In most cases, the source systems are doing exactly what they're supposed to do. The opportunity really is in creating this governed reporting layer that brings all the data information together. And so, we will sometimes hear, we're waiting on our data warehouse project to be complete or to be finished before we start our reporting. And we don't find this to be an effective approach, given the fact that a data warehouse, by the definition of it, is a living, breathing organism. So in theory, it will never be done. It will never be fully complete. And the day that it is, it's immediately stale. So what we propose and work with our clients on is building a reporting data mart, which is essentially a subset of what would exist in a data warehouse. And so it doesn't replace the data warehouse by any means, but this concept of this reporting data mart is really powerful. So instead of replacing your RDMRI or waiting for this data warehouse to come down and have everything clean and perfect and become your new single source of truth, you have this ability to work agile through the Workiva platform to bring these systems, whether it's because you already replicate through SQL Server, you can use SFTP or APIs to bring the data inside of the Workiva platform. And the benefit there is that you're using Wdata, which is the data management portion of the Workiva platform, to help unify this information, apply those mapping tables, and start to create this reporting data mart. And what is powerful about it is that because the way that Workiva is source system agnostic, it is easy to repoint your data mart in Workiva to a data warehouse whenever that is available. So you don't have to wait for this information to be fully validated, embedded in your data warehouse. You can start quickly and get this information in. And honestly, it will bring you a lot of value in terms of identifying, where mappings are inconsistent, help you apply and develop the rules needed to clean the data up systematically. So you start with this, scheduling the data to run on a periodic basis. You pull the data into this governed reporting layer. You apply your mappings, your business rules, and all your validation checks. And now you're working towards creating this reporting data mart. And so if you think about this architecture from left to right, it starts your source systems, like the ones that we've mentioned, which could also be flat files. And one of the other benefits of the Workiva platform is that it also does have the ability to request information via survey. So you can actually create a data input template inside of the platform. So instead of having to rely on emails or going to find a spreadsheet, if you do need to rely with other teams that exist outside of your core reporting team, you can either invite them into the platform because Workiva thrives on having many users collaborating all in one space, or you can use those report data collection templates to collect the relevant information in the exact format that you need to eliminate the need for emails or sending files back and forth. And so once that information flows into the governed Workiva's Wdata environment, it then becomes your reporting foundation. So from there, you basically can unify all of your data, and using their native query builder, which is all drag and drop, you can essentially serve up and isolate the information that's needed from that reporting data mart and provide it to your reporting users and financial reporting analysts in a meaningful fashion. That's something that they can actually own and govern and work through quickly. So that real value is that governed middle layer where all the work happens at once. So instead of exporting the same data, dozens of different spreadsheets, or having different teams apply their own mappings or calculations, the data is standardized, it's validated, and it can be reused across all downstream departments, which will dramatically reduce the manual effort in improving consistency across the organization. And it's, further to that, right, it also provides something that's increasingly important for both the finance teams and the auditors, which is data lineage. We like to joke with our internal teams that you can't hide in the Workiva platform. Everything is tracked, everything can be validated, all the audit logs are available. So rather than trying to reconstruct how a number made its way into a report by searching through emails or different spreadsheets, you can trace that number directly back to this reporting data mart and ultimately back to the source system. So that level of transparency builds confidence both internally and externally. So the automation piece, again, using chains, creating recurring integrations and those pipelines. So those pipelines are another value to your organization, right? Imagine, getting late adjusting journal entries in, having to rerun processes, having to update all your spreadsheets with the new trial balance data pulls. So all that can happen either on a scheduler or on demand. And that's a huge value for a lot of our clients. So they basically to be able to trigger the refresh process via those data pipelines and pull that data in. So they're always using the latest and greatest information. And we've done this over so many years now that we have plenty of accelerators available. So we've pre-built accelerators to connect to systems like Yardi and MRI, as well as some of the more management company systems like Workday and NetSuite. So all really simple integrations for us and something we've done plenty of times. So that really helps with the time to value. So even if you are currently like an SEC only client, moving to a connected SEC advanced SKU and just basically bringing in your trial balance and your property level information can add a ton of value to your team. And so, ultimately getting to the right business outcomes. So instead of waiting for someone to find the right spreadsheet, reconcile these numbers, asset managers, deal teams, finance, we're all working off of this kind of governed reporting data mart. And this system basically operates in autonomy, and you now have this information available, and you can scale up your reports and put together all your hundreds and hundreds of thousands of page packages very quickly. If you go to the next slide, please. So just an example of an output, and I'll just, for the folks that may have not seen Workiva, this is representative of Workiva documents and related spreadsheets. So looks and feels just like the Microsoft platform. If you look very closely, you can see, green underlines, green asterisks. This is the linking technology, which is really the most powerful part of the Workiva platform and kind of what they've cut their teeth on originally back when they first came up with this solution to help support SEC. It's evolved so much from there. So even the images right here on these screens can be dynamically updated based on the property that this is being reported on. So there's so much advancements in the technology to help support our REIT customers. We definitely encourage you guys to look into this and to understand a little bit more about this kind of reporting data mart structure.
Just a reminder, you can use the Q&A function if there are questions you want to ask of Steve and Nigel based on their experience, both within real estate, working within the Workiva platform, and more broadly. Today really wanted to cover identifying kind of the structural reporting gaps between those public filing layers, as Nigel pointed out, and really the underlying property portfolio layer and the operational and audit risks and the gap that is created there, and really start to take an inside look from an approach perspective with the Workiva platform on how real estate and REIT teams are thinking about their reporting operating model, including kind of the integration of the property data, the JV reporting, non-GAAP disclosures, and automation with all of your different systems. And so hope we took a good amount of that away from here today. Overall, when we think about getting started, it's really a first discussion with our depth of expertise, not just in the financial kind of reporting ecosystem, but more broadly in kind of the overall target operating model. As Steve and Nigel hinted at, this doesn't have to be a multi-year journey or a large investment from a financial reporting perspective. That doesn't necessarily mean you're going to go solve your entire operating model upstream as you get into the, either the fund, the investment, the property level accounting, to the asset and portfolio management, all the way up to the investments and the leasing team. All of those operations and functions definitely matter. And we have experts that we can pull into a quick initial kind of diagnostic conversation with where you're at today, whether that's producing 50 statements, 300 or plus statements, or if you stop counting the number of statements you're creating from a reporting perspective. But overall, taking away from today, kind of asking yourself and your teams a few different questions. One is kind of how many different entities in the structure require financial statements and recurring reporting packages. I think having a strong understanding of that will be important, and that includes every property co, JV, subsidiary, TRS, and other relevant vehicles that are not just the public filings calendar, as Nigel hinted at. Question two is starting to ask yourself and your teams, how many of those reports live today inside a governed reporting platform with some of the features that were discussed, whether that's linked data, controls, workflow, all of that, not just simply produced through the Microsoft suite, whether that's Word, Excel, email, or even something like InDesign. And then question three, when a number is wrong in some of your entity statements, who typically is finding that first? Is that somebody internally to your organization? Is that your auditors? Is it somebody else? I think understanding those types of questions start to give some clarity and credence to kind of the breadth and scale of the opportunity, whether you have Workiva today, or whether and you think about how can we expand this further with some of the kind of rich features and integrations possible to create the outcomes Steve and Nigel have alluded to, or whether you're interested in getting into Workiva, knowing what others are doing. We're happy to have a quick conversation and pull in the right experts from our side on the call and otherwise to help understand kind of the pain points today and where the near-term wins and where some of the longer-term potential priorities to think about. And so with that, want to, one, offer up that conversation for those that are interested, happy to jump on a call with you and your teams. But two, dive into a little Q&A if there are questions from the call today for Steve and Nigel on our experience. So if you use the Q&A function, feel free to drop in some questions there. And then maybe to get it started, I guess one question coming in, I guess, Nigel, for you, when you think about kind of your experience over a number of implementations, if an organization hasn't really kind of done that full kind of inventory of property, entity, JV reporting deliverables, where do you think they get started, and how quickly do you think organizations can pull that together?
Yeah, I mean, that's a great question. It's obviously the elephant in the room is like, hey, I heard what you're saying. I understand maybe there's a manual process beneath the SEC, but where do I start when I head back to my organization? How do we start this discussion? And that's the most important thing. So I think first, you have to kind of have conversations to surface the pain and where it truly lives. Oftentimes, it depends on kind of your layout, but your property accounting is got you got your army of property accountants, kind of each doing their property statements, and then you have the corporate reporting team, which is the team in head office, and those two teams could literally physically sit separately, or they might just sit on the same floor or on different floors in the same building. But I think you have to close that gap, right? And you have to kind of bridge the gap between your operations finance, the folks kind of doing the CAM and the recoveries and the rent rolls and reconciling every month, at a property level, and the corporate reporting team. And I kind of, in my vision is to kind of, you have to kind of identify a change champion, and it could be more than one person, right? It might be somebody from your corporate team who might be involved in some review capacity for the separate entity statements, and somebody from property accounting, right? Often maybe the VP of property accounting. So I think a good starting point is to reach out to the head of property and schedule a meeting to see, hey, like, what is your current process today? What does that look like? They might say, hey, we've heard of Workiva. We know head office uses it for the external reporting, but I'm good. And that might be the answer that you get initially is and that's because it's probably working, right? I mean, you're getting the filings done, the statements are coming together, but it's kind of more, the question is like, how is that kind of work getting done? And is there better, smarter way to work, a more efficient way to work, right? And scale. And it's about creating that governed, repeatable process of generating the property statements, doing them faster, more accurately, with more polish and more finish. And kind of how are you supporting the front office, the frontline managers, the leasing and the asset management team that are doing the deals, that are out looking for the next anchor tenant, that are trying to get the occupancy rate to be slightly higher. So definitely the star properties. Everybody knows the stars and the dogs in their portfolio. But hone in. Often the star properties are going to have audited statements. If you have JV partners, I would start to get that inventory and start to stratify it by, here's the ones with JVs. Here's the ones that are wholly owned. Okay, wholly owned, the statements just kind of hit our filing cabinet. Maybe there's some lender covenants. They're like probably phase 3, like lesser priority. Here are the audited statements, right? If they're audited, it's a signal immediately that you either have a JV partner that has requested audited statements under the LPAs, or you have, or it's just a high profile development. right? It could be a very, very high profile development with multiple partners. And, you have to stay on top of how that property is developing, or how the NOI is doing on a monthly basis. So, and then you kind of have a column in your spreadsheet for reporting cadence, right? Is it monthly, quarterly, annual? Is it something more than monthly? Are the monthlies face statements only? Is there cash flow statements involved? Yes or no? That adds complexity to the reporting, right? And start to kind of delineate what that inventory looks like. So I guarantee someone has a list, but it's kind of taking that list, working with property accounting, and kind of stratifying it into saying, okay, what's the reporting cadence? Who are the stakeholders? And why are these statements important, right? And then kind of prioritizing how you're going to roll this out, how you're going to scale. But yeah, very good question.
Great, thanks, Nigel. And I guess once you have that inventory, obviously from like a diagnostic kind of question, and people having a chance to maybe see what's in the Workiva platform, how do you think about getting started in terms of picking a first use case, and just the concept of whether you start with kind of a proof of concept and starting to see what that looks like within the Workiva platform, kind of beyond scaling to that full inventory?
Yeah, I mean, that the proof of capability, the proof of concept, is a terrific way to begin coming out of a health check, or looking at something like this, and a solution that needs to scale and kind of roll out if you're talking volume and throughput. So we come across this in private markets all the time with our fund reporting projects, and dealing with a lot of our fund admins and stuff. But the use case is the same, right? With single investment vehicles and REITs, it's almost identical concept, right? You start by identifying a representative sample. You kind of do a small proof of concept. It's often low effort, but very quick, a couple of weeks, 2-3 weeks turnaround, depending on how you want to box in the proof of concept, what you want to see. So we kind of work with you to sort of go through a framework of, here's how we kind of want to, here's the kinds of things that we need to see to get comfortable that this tool is going to actually solve all our requirements and pain points. So we come up with a punch list or a set of acceptance criteria. We'll do that for you, and then we'll kind of do a readout and go through and make sure that resonates, and come up with sort of a schematic or an architecture of what a full solution could look like. And then we often see in terms of implementation of a full project, sort of like the hybrid or co-delivery model, as well as a deep enablement model, tend to be more popular. They tend to be a little bit more budget friendly than alpha-led, alpha-owned kind of full partner-led replications, where we will just develop the templates, the high-value templates, work with your team to kind of standardize what those property statements look like. Should be fairly, I don't want to say easy, but fairly straightforward to templatize them. And then when you're talking about replicating those templates across additional property statement setups, we could do 1 or 2 guided replications with your team, where the client kind of does a walkthrough, and we kind of do an advisory support model where we guide them through a couple of replications till their team feels comfortable. And then their team kind of owns the scaling effort, right? Obviously, a partner could do replications, and we can probably do them quite quickly. But the fastest path to self-sufficiency is that enablement model, that deep enablement, where we're going to give your team all the tools and the training materials, the recorded training sessions to basically help you become self-sufficient in scaling and rolling this out. So you kind of buy that high value asset from us. That's the investment in the templates. And then we kind of support you in scaling and rolling out. And it's generally going to be a phased rollout. If you're, for the folks on the line who have 300 plus properties, it would generally be a phased rollout. The ones with 50 or fewer properties, obviously a shorter time frame, but same idea.
Cool. Thanks, Nigel. And maybe one last one here, Steve. I think just Nigel bringing up the good concept of, depending on your role on this call or on this webinar here, right, there are real silos in organizations, whether that's even within departments or across departments, whether you're owning public reporting, JV reporting, whether you have the reliance on your IT teams for a data warehouse that's either there or in flight, or even further kind of upstream in the front office with, leasing transactions. Obviously, in a perfect world, everything would just work harmoniously from front to back office, and financial reporting would be easy. I guess, Steve, in your experience, kind of knowing these silos are real, they exist. Like there is this concept of the reporting data mart that can be stood up for the reporting automation within Workiva. Like, what guidance do you give clients where those silos exist, where there's fears of like, well, are we creating another data warehouse, or how do you help navigate that to know like what is done in Workiva is going to be reusable in the future too, even if there is data warehouse work in flight, or a future data warehouse that people are talking about and promising?
Yeah, that's a great question. We look at Workiva's WData platform, and specifically, the WData tables element of it, which is essentially think of like a Snowflake or a SQL table. Basically, the idea though is it's that subset, right? But it's basically a middle layer between your source systems and your reporting. And so the idea is that because it is not tied to a particular system, it's interchangeable. So the only kind of caveat or risk is if you're, wholesale change your chart of account structure, or maybe you're moving from one system to the other, and you imagine that all of your dimensions or attributes are going to change as part of that process, which is very unusual from what we've seen. That it essentially becomes this middle layer that can be just repointed once you have that data warehouse up and running. So it's not something that when we have these conversations with the CTOs, the CIOs of the world that are concerned about us coming in and positioning Workiva as a reporting, enterprise data warehouse, it's very clear that very clear value proposition that is not what we're talking about. So the idea is that you are able to be more nimble, right? So you're able to get this information quickly into Workiva in a tool that you can understand, it's easy to use and digest, and essentially it becomes this kind of catalyst or this accelerator to start informing the broader, IT and org or like DBA teams, like what some of those mapping rules or logics or pitfalls are with the current data. And so you can build this model in a data model in a way that's easy for the business teams to own. We've even had clients use the spreadsheets within Workiva to help maintain some of the roll-ups or the mappings that are then fed back into that reporting data mart. So the idea is that we're putting the information into the end user's hands, and it's very limited in terms of the amount of rework that you're going to potentially have, because everything downstream from that table is essentially going to be automated and connected. So all you're doing is just repointing that WData table from the series of different source system or flat files that currently exist in your ecosystem to your data warehouse when that's fully online. So again, it's not something there's not a big bang. These projects are typically weeks to months at the most. So you can add value to your organization very rapidly. I think that's definitely one of the keys. Hopefully you guys walk away from today's discussion.
Yeah, one last question in the chat, I think is a good one to mention to the different teams. Can the property accounting teams use the Workiva platform for their monthly closing processes, not just for reporting, but using it in a more automated way for the monthly close process? Curious, Nigel, to hear your thoughts on that.
Yeah, great question. Thanks for asking. I know we have a few minutes left. Try to get to a good answer here, but I definitely think yes, for sure. We'd like to kind of understand exactly what the requirements in that close process look like. But I've seen monthly close checklists implemented with a good degree of success, and Workiva is a great tool for that. There's templates. There's probably templates in the marketplace. We have several as well. I've personally implemented a couple of them as well that could be very beneficial in terms of reviewers and having sight lines and dashboards into which properties are done and which aren't done, and how we kind of looking in terms of an overall monthly process.
I think one thing too, maybe just to add. So I think where we see Workiva being used to support the month end close to it, it doesn't replace like a reconciliation solution like a Blackline or a Flowcast or a Trintech, and it doesn't necessarily replace like a consolidation system like a OneStream, et cetera. But what it can do is, because you're talking about this like governed spreadsheet environment, a lot of the accruals that you are calculating currently in Excel spreadsheets or maybe some other type of homegrown system, those are great candidates to move into the Workiva platform in this kind of governed environment. Nigel's point around the closed checklist. So you have like Workiva has this inherent workflow automation wrapper around the whole thing. So you can basically build and memorialize your entire month-end close process inside of the Workiva platform. It really is just about understanding, what your intentions are with the close, and basically figuring out, is this a great candidate to sit inside the Workiva platform? I think the more data and downstream processes you bring into Workiva, the better automation you'll have. You just want to be mindful of, there are purpose-built systems for various components of that close process that you wouldn't want to replace necessarily with the Workiva platform.
Awesome. Thank you so much, Nigel and Stephen, for the discussion today. Thank you all for participating in the conversation today. The recording and the follow-up resources will be sent after the webinar today. Please do take some of this back to your teams as you're thinking about kind of your complete reporting, not just public, but kind of the complete reporting suite we talked about here today. Feel free to reach out to myself, Nigel, Stephen, our team, if you're interested to just have a bit of a diagnostic type conversation around where you're at today and how you could be better leveraging Workiva beyond the public reporting. And obviously, thanks to Workiva from an overall partner perspective and helping drive some of the registration and bring this audience together for this meaningful discussion. So hope you all go off and have a wonderful day today. And thank you so much for your time.
Thanks all.
Thanks, everyone.